Hello there. Welcome back to my channel. In this video, we want to look at a question from the question paper of November 2024, and we are going to look at the calculation of the net present value, and also we are going to prepare the debtors collection schedule, and also the cash budget. So, going to our question, this is our question, which is question 6 on that question paper of November 2024. So, the question reads, Big Brothers Constructors wants to buy a new machine to use in its production process machine with the cost 950,000 rands. The rate of return is 15%. Then you are given projected cash flow from the machine factors. So on the required part now, first part, calculate the net present value of the machine. Our question has got 8 marks. So basically, calculate our net present value. We are going to say our projected cash inflow, for example, for the first year, we multiply it with the discount factor of period 1 in the column for 15%. So we can take note that the rate of return is 15%, and 15% we are having it in this column. So basically, that we have for projected cash inflow, and we are going to say 230,000, and then we multiply by 250,000. We multiply it by 0.756. So that's how we're going to present in our answer section. So this is going to be our table that we're just going to fill in as well. We can also indicate in terms of the periods. Remember, our periods are ranging from period 1. We can just take note. We have period 1 to period 5. So basically, period 1, 2, 3. Cash inflow for year 1 to 5, we can also indicate 1. Year 2, we have 250,000. Year 4, 450,000. Year 5, 500,000. So here we put 300,000. So basically, this is our cash inflow. Then we also have a discount factor in the second column. So we also take our discounting factors, whereby we put 0.870 in the first column. And then we have 0.756 second column. Second part, but 0.658 for period 3, 0.585. So we take note of that. Year 3, we have got 0.658. And then we have 0.572. And then we have 0.497. And obviously, present value now, we are now saying cash inflow times discount factor equals our present value. So basically, that's what we have. Period 1, 230,000 times 0.870. You're going to get your answer is 200,100. Period 2, 250,000 times 0.756. You're going to get your answer is 189,000. 8, we get it as 197,400. Move on to our period 4, 450,000 times 0.572. You're going to get it as 257,400. Period 5, we have 0.497 times 500,000. You'll get 248,500. So basically, that's what we have. Then from there, we need the total present value. So here we're going to have total. Of which we are going to add everything in the present value column, and then we are going to get our total there. So if you add, you're going to see that your total is going to be 1,092,400. So basically, our total, you get it as 1,092,400. Then we now remember the question. Let's refer back to the question. Our question is saying calculate the net present value. So it means we have to subtract the cost price. We have to subtract the cost price, which we can refer back to be 950,000. So we subtract 950,000 as our cost. The business needs your assistance in evaluating the new machine, which costs 950,000. So we take 950,000 as our cost. So we come here. We are going to say less cost price of machine 50,000. So minus, so it means we are supposed to have our final answer, which is going to be our net present value. So here we're supposed to get our net present value. So we have net present value by saying 1,092,400 minus 950,000. So what we get becomes 142,400, which is basically it's 142,400, which is a positive. Remember, if our net total present value is greater than the cost price, we get a positive net present value. But if your total present value becomes less than the cost price, it becomes a negative net present value. So basically that's what we have. And we'll try to move on to the next part of our question, which is now 6.1.2. And we see that 6.1.2 reads, should the business buy this machine? Answer only yes or no. Of course, the business has to buy. Why? Because of the net present value. If it is a positive, if we are evaluating one project in terms of only, in particular in this question, we are only evaluating one the cost of a machine. It means we've got one alternative, and we check if it's a positive NPV or net present value, or it's a negative net present value. So if it's a positive net present value, it's a yes. But if it's a negative net present value, it becomes a no. But if you are evaluating two projects and you want to choose one, you choose the one with a higher positive value. So basically that's the difference. So in this case, we are saying yes for 6.1.2. Then we move on to the next part of the question, which is saying give a reason for your answer in question 6.1.2 above. Of course, it's because it has a positive net present value. Yeah, it resulted in a positive it resulted in the positive net present value. So that's what we have on that part. We now move on to the debtors collection schedule, which is going to be the next question. We can just refer there, which is now our 6.2, which is Palali planted for November, December, January, February. And we are seeing that for November is 2021 to December, then January to February is 2022. So we're given additional information given. Then 6.2.1, prepare the debtors collection schedule for January 2022 and February 2022. Round off your answers to the nearest round. Very important, take notes that you have to make a round off and every 6 months. So we are going to refer to our question. For our answer section, we also have debtors collection schedule being presented. So basically, we have our months that are ranging from November to February. So we can just make a list of those months. We have got a column for a column that we have the year that we can list our months. That is November to February. So we're going to say we've got November, December, so this is what we have: November, December, January, February. Then you are given a column there that you need to put your credit sales. Remember, these are the columns for credit sales. So let's calculate our credit sales for November to February. So 55% of sales are made on cash. And remember, if you say cash sales, you add it into our credit sales. It gives you total sales. So we can just take note of that formula. So with that, we can now be able to find our credit sales given cash sales. We are given cash sales is 55%. So it means our our credit sales becomes 100 minus 55, which is going to give us a 45. So 45% is our credit sales. So that's the figure that we want to calculate credit sales using 45%. So what we are saying now is we calculate credit sales for November by saying 0.45 times 250,000. 0.45, which is 45% times 250,000 to get our credit sales for November. So if we calculate it like that, you're going to get your figure is 112,500, which is going to come here. And we do the same thing for December, whereby we are saying December we have got 290,000. So 290,000 times 0.45, and you see the answer that we get there, get 130,500. So here we have 130,500. So we do the same thing for January, 0.45 times 310,000. And the answer that we're going to get is 139,500. For February, it is 171,000. So let's prepare the debtors collection schedule for January 2022 and February 2022. So our debtors February. So very important. So now what we are going to do is we are going to check the terms of the debtors collection schedule stated in the question, whereby we are saying we try to see. We are going to see that the first point of the 3% discount is granted. So basically 30% is a decimal, it's 0.3. And then after the amount that you get minus 3%, and you get your figure is 97%. So you are going to consider 97% is 0.97. So you are going to calculate by 0.97. So basically, I think that one is straight. As we are saying, what is for January? Credit sales for January that are going to be collected for January is 30%. So you say 0.3 times credit sales for January. Then the answer that you get, you multiply it by less 3%, which is 97%, and 0.97 is a decimal. Basically, it's simple. Then we go there, we do that calculation. So for January, we are saying what credit sales for January is here. So basically, for that one, we're saying 0.38%, and then the answer we reduce it by 3%, which is going to be 0.97. So we calculate it like that. You see that for January, the answer that we are going to get is 20,125. Then we consider for February. Remember, we only consider about February. What are the sales for credit sales for February that are going to be received in February? So we also say 171,000 being credit sales for February. We multiply by 0.3, and the answer that we get multiplied by 0.97. And we see that the answer that we should get there should be the answer that we are going to get. We can just try to see what do we get. We multiply here. We can just take note the answer that we have there is quite wrong. We can just maybe remove this one. So what we are saying is let's start with one for February being received in February, an amount of 49,761. So we have 49. For January being received in 29,500 times 0.3 times 0.97. So the answer that we have is 40,595. 40,595. So we can just take notes. 40,595. So basically, this is what we have on our January being received in January. So I think that one is clear. So having that now, we can now be able to go to the second term given there, whereby we are done with the first point. Second point is saying 40% is collected in the month following the month of sale. 40%, which means credit sales for December 2021 will be received 1 month later. which is going to be January 2022. So basically that's what we have, and 40%. So already we have got our credit sales amount. So what is for December? 130,500. Its proportion, 40% is going to be received at the following month, which is going to be January 2022. So basically we are saying 40% is 0.4 as a decimal multiplied by the credit sales for December, which means credit sales for December being received in January this year. So if you multiply, you're going to get your answer is 52,200. So we do the same thing for credit sales for January will be received in February, being a proportion, the same proportion, which is 40%. So we are saying this 139,500. 139,500. So we calculate it 0.4 times 139,500, and we are going to put it here as 55,800. 55,000. So we are saying credit sales for January are being received in February, 55,800. So we can just put our answer as such. Then the next point is saying 25% is collected in the second month following the December and January. So January. So it's 0.25 is our 25%. So we are going to say 0.25 for November being received in January. For November, we've got 112,500. So for November being received in January, we get 20,125. And then the one for December will be now received in February, which is 25%. So it says 0.25. So December being received February, we are here. So basically that's what we have on that part. We now have completed and February. So our receipts now. So we can just put some lines so that we are now calculating the total. Total is in the column for February. You need to get a total of 142,000. To get the column for January, you need to get your total is 120,920. So take note, these are the total receipts. So as we are, remember, we're calculating the data collection schedule. So the collections for January, we have our total here. Collections for February, we have our total here. So that's what we have. We move on to our next question, which leads us to prepare the cash budget for January 2022 and February 2022. So we refer to our answer section. This is going to be our cash budget. So remember, the cash budget records actual cash. It's a focus of actual cash movements in and out of business. So non-cash items are not going to be recorded in the cash budget. For example, we've got depreciation. It's not supposed to be recorded in the cash budget because depreciation does not concern movement of cash. So let's take note of that. We are going to start with our cash sales for January and February. So simple. So we come here. So we see that what we have is 55% of sales are made in cash. So very simple. So we need January and February. So you're going to say by the sales for January, which is 310,000. This is going to be our January. And then for our February, 0.55. For February, 380,000. 380,000. So basically, that's what we have. So for January, if you say 0.55 times 300, 170,000, 170,500. So we have 170,500. So we do the same thing for February. Get your answer is 209,000. So that's what we have. And then from there, we go to receipts. So remember, receipts from debtors, we have already calculated in the debtors collection schedule. So very simple, we just refer back to our debtors collection schedule. So if you refer back to our debtors collection schedule, you see that for January, we got 120,920. So 120,000. 920. Then for February, we got 142,186. 186. And then from there, we can add to get our total receipts. So if we add, you're going to see that for January, you get the two figures, you're going to get your answer is 291,420. And then for February, you add again the two receipts, you're going to get your answer is 351,186. And the description is total receipts. So this is what we want that part. We now proceed to payments, whereby we start with the description for total payments. So what we are going to do, is we are going to list all the payments that we have requested beneath our description of total payments. Then the total will come in line with our total payments and description that is in the same row. So we can start with the payments to creditors. Payments to creditors, we refer back to how can we calculate payments to creditors. We are told here on this point the second month following the month of purchase. So our credit, but they will be paid 2 months later. So we are saying months 1, 2, so that the payment in January for purchases 160 for November. So 160 is going to be for January. So we refer back there and say January 160,000. And we refer back and see that the ones for December are the ones for February. We're going to say 1, 2. So the purchases for December is 166. So as well, they will be paid in February, 166,000. So that's what we have in terms of payments to creditors. Then we move on to other payments that we have in the question. We can get them in the question. We are told that this is indicating payment. So we can see what do we have. We are seeing that for wages, we have got 45,000, and in the additional information, we do not have anything that is adjusting the figure of wages. So we take 45,000 for January and 45,000 for February. So we're saying wages, whereby we have 45,000 and also 45,000. Then we go to the next one, we have standard expenses. So what does it mean? Depreciation is a non-cash item. Let's take note, depreciation is a non-cash item. So we don't include it in the cash budget because it doesn't include the movement of cash. Remember everything that we are entering in the cash budget concerns the movement of cash in and out of the business. So depreciation is out, so it means we are going to subtract 2,500 from the figure for standard expenses, which is 37,000. And if you subtract there, you will see that the standard expense figure becomes 35,000. Very important. So 35,000 is going to apply for January and also for February. So we come here with standard expenses. We have 35,000. So this is the last expense that we have, and of course, we need to add them to get the total payments. So in other words, we're closing here. So if you add 160,000 plus 45,000 plus 35,000, we get the total payments, which is going to be 240,000. And the same thing, 166,000 plus 45,000 plus 35,000, we get a total of 246,000. And total payments, we subtract them from total receipts. So we'll show them in brackets. To get cash surplus, we can just maybe give the description of what we are supposed to get there, which is cash surplus or deficit. cash surplus or deficit. So if it's a deficit, we are supposed to show it in brackets. So we calculate for the first column for January. We are saying 291,420 minus 240,000. Then we get our cash. It's going to be a cash surplus of 51,420. Do the same thing for February, where we are saying 351,186 minus 246,000. Get again a cash surplus, which is a positive figure. A positive figure for 105,186. That we have got a cash deficit indicating or closing bank balance. So the bank for January come to the balance, we get a final balance of 194,606. So that becomes your final balance of the cash budget. That we were preparing. So basically, this is what we have, guys, from the question paper of November 2024. And we can just take note. The question is 30 marks. Very important for you to take note. So basically, this is what we have. And let's stay tuned for more videos to come. Let's take note more typical examination questions will be uploaded on this channel as we approach our exams. So let's stay tuned. Let's subscribe and let's share the link to our colleagues who are doing cost and management accounting and 6. As for this video, I'm signing out. Let's meet again in the next video.